Mortgage rates are going straight up again and showing no signs of slowing down. If I had to guess, we're probably going to be at about a 7.4% for a conventional 30-year fixed mortgage, which would be a 0.4% jump from just a week and a half ago. Inflation came in hotter than expected on last week's CPI report, which started the 10-year climbing higher, but then you add to it the attack that happened in the Middle East this weekend and the increasing uncertainty of a larger war happening, and it's just not looking likely that rates are going to drop anytime soon. The only silver lining of these higher rates is that active inventory is starting to grow. And if we don't want to have a repeat of 2021 and 22 when everything was multiple offers and prices were going straight up, then we will still need inventory to just about double from where we are now before we see a significant drop in rates. So it's not all bad news. Inventory growing is something we desperately need, and it's something that's happening as a result of these rates. We're covering all this and much more in this week's market update. My name is Michael. I'm a real estate agent in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends, we're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part, the top 10 ranked charts of both hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button, and if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that is in the description below. Okay, today's April 15th. Let's see what the data is telling us. And if this is an old update, you can click the playlist here and it'll take you to the latest weekly update. Okay, first up is market news. The CPI report last week came in literally 0.1% hotter than expected on a month-to-month basis. And that caused mortgage rates to shoot straight up, 0.1% hotter. So we saw an increase last month of 0.4%, which is the exact same increase that we saw in February, which gave us a total yearly increase of 3.5%. And that's all it took to basically remove one of the rate cuts that we were expecting this year. Up until last week, things were still looking hopeful that we would be seeing 3 rate cuts this year, but after last week's data, I would say there is no chance of the first one. And the biggest reason we came in hotter than expected remains the shelter component of inflation. Shelter makes up 44.4% of these inflation numbers. And as you can see, looking at this chart, it slowed down its deceleration last month. So we were expecting something more like what we saw last month, this big drop down. Instead, we slowed down. And that's pretty much all it took for us to miss the numbers. Now, also things like car insurance and energy did see an increase as well, but those are nowhere near as big of a factor as this housing component. And just something I think is interesting is we are seeing disinflation in apartment rents, but we're not seeing it in housing rents. And if you didn't know how this works, the shelter component of inflation doesn't take into account anything about the true housing market, of the cost of buying a house, these higher mortgage rates, the fact that home prices are continuing to increase. Like when you think of inflation, you think of how unaffordable the housing market has come. You would probably think that chart we just looked at is wild. Housing inflation's not coming down. It's getting more and more expensive to buy houses. That's because with regards to inflation, all they care about is rents. So your mortgage may cost $5,000 a month if you want to live in this neighborhood, but if you could rent a similar home for $3,000 a month, that's the only number they're looking at for inflation. It's called the owner's equivalent rent of residence. So if you're ever wondering how in the world is housing inflation coming down when it's getting less affordable, it's because they only ever look at rents. And the last thing you should know is that the Fed does not track this CPI number with regards to their 2% inflation target. The Fed tracks PCE inflation, which is a different report. But obviously, the bond market still cares about this inflation number, which is why mortgage rates went up. Remember, the Fed is only setting the federal funds rate, which is kind of the base number, and then the bond market decides the actual mortgage rates beyond that. And something else that's interesting is the gap between the CPI and PCE inflation numbers historically would be around 0.47%, and currently it's double that. So these two numbers could not be more different right now. I know it's a complicated topic, but what you need to know is one rate cut from the Fed that we were expecting is now off the table. And that was true even before the attack in the Middle East this weekend. And honestly, I'm not sure yet how this escalating threat of a larger war in the Middle East is going to impact. Some people think it's going to cause a flight to safety in the bond markets and for mortgage rates to cool off. Other people believe that wars are going to bring more inflation, which is going to bring higher rates. But I'll tell you, so far, looking at the 10-year, it is going straight up today, which tells me people are expecting war would bring inflation. Okay, moving on, let's start with national housing inventory. This week we had an increase of 14,072 homes for sale in the U.S., which gets us up to 526,462 homes available for sale in the country. For reference, the all-time inventory bottom in 2022, we only had about 240,000 homes for sale. At the peak of last year, we had 570,000 homes for sale. And this same week, back in 2015, we had 1,042,000 homes for sale. So we're up basically double from the 2022 bottom, but we would still need to double again to get back to a normal market. Now let's look at new listings. We had a nice big jump back after last week's dip. Remember, last week we dipped back here, back to 2023 numbers, which is terrible, but we never panic on 1 week because what we're looking for is a trend. And as you can see, we shot right back up, and we are literally right back dead on tracking with 2022. Just where we've been most of the year. We've been a little bit above, we've been a little bit below, but I would say we are scary close to just tracking 2022 numbers, which is way better news than tracking 23 numbers. As you can see, this was an awful year, but we really need to be higher than 2022 numbers. We need more people listing their homes than this if we're going to get back to a normal market. So there's two parts to the equation. We need more people listing, and we also need a higher days on market, giving inventory more time to stack up. So this half of the equation is not looking good so far, but the other half, days on market, is increasing. Inventory is stacking up with these high rates. So we have one half of the equation. Like I said, we need to get almost double where inventory is now before we see a significant rate drop. Otherwise, we run the risk of repeating 2021 and 22. Okay, the last thing we cover nationally is the percentage of homes having price decreases. Every year, it's totally normal for a third of homes to take a price cut before selling. And looking at the national chart, this week we're at 32.1% of homes having a price decrease. Last year, we got as high as 39.2. The year before, as high as 43.2. But it's normal for this number to start increasing at this time of the year. And it's a good thing because, like I said, it means days on market are going up, and that's half of the equation that's going to get us back to a normal inventory. So all we're looking at on this chart for the rest of the year is aggressive swings in either direction. We're looking if anything gets abnormal. Right now, it's totally normal. But don't be surprised, this number should be going up every week all the way up until probably November. Okay, moving on to mortgage rates, the sad story of the week. We started the week at a 7.11 and got down to a 7.06, and look at this, from one day to the next, 7.06 to 7.34, all the way up to 7.37, and then it looked like we were getting a little bit of hope on Friday at a 7.3, but as we look at the 10-year, okay, here is the bad news looking at the 10-year. The very bad news is we are well outside of my yearly prediction range. I was thinking we would hit as high as a 7.25, and I said that back here, way back when we were at a 6.6. I thought the top was gonna be about a 7.25, which was gonna correspond somewhere up here being the top, which it was for a little bit. But we have long since left that. We were in the danger zone last week, and we took off straight up. And really, I think it's likely we tap this line before we see any meaningful attempt at coming back down. But just so you know, that 7.3, we closed right here, okay? We started with a huge gap up today, plus we're running up beyond that gap, which is why I think it's very likely we're gonna be at least a 7.4 today. But there is also some good news here. As I talked about a little bit last week, I wanted to show you a chart of what this actually looks like, but the spreads are getting better. What I mean by the spreads is, historically, whatever the federal funds rate is, that's the number that everybody's talking about. Is the Fed going to cut rates, raise rates, whatever the Fed's rate is. Historically, we're only about 2% above that when it comes to mortgage rates. But as you can see, recently, we've been most of the time close to a 3%. We've been over and under 3% most of 2023, a lot of 2022. So the spread between the federal funds rate and the actual mortgage rate has been almost a full 1% higher than it normally is. But as you can see, this year it's been dropping and dropping, and we're actually down only to 2.4%. So 2.4% from 3% means we've improved 0.6%, which just means we don't need the 10-year or the federal funds rate to drop nearly as far as we once did to get to better mortgage rates. So think of it this way. If this trend were to continue back down to the normal 2%, then we don't need the Fed to cut rates. We don't even need the 10-year to drop, and we would be only at a 7% rate today instead of a 7.4%. And this number goes down, the spreads get better as there is more economic certainty. So I don't know how the attack this week is going to affect that, but it has been trending down since last year. And that's actually very good news. I feel like I'm underselling it. That is very, very good news. Now, regarding mortgage purchase applications last week, this is totally expected. We had a giant run up in mortgage rates, so we saw a 5% decrease in the number of people applying for mortgages, which doesn't sound like much, but the more significant number is that makes for a 23% yearly decrease. So only 5% down on the week, but it brings us to 23% down on the year. But as we always say, that's just 1 week. We don't panic over 1 week. We're looking for the trend, and the trend has been up this year. At least the weekly trend has been going up. The yearly trend has still been down, but every week it's been going up. So seeing one down week is not that concerning. And we also saw a big rebound in the number of pending sales this week. So we don't know what this means yet. We're going to wait and look for a trend. But obviously, rates are still 100% in control of this market. Okay, before we move on to the local market data, if you're considering buying a home in the Dallas-Fort Worth area in 2024, a couple of things. One, I'm now doing a weekly online home buying webinar. This is everything you'll ever need to know about buying a home. So if that's you, click the link below, sign up, or there's also an option to watch an instant replay. Number two, I've developed a max affordability calculator that hundreds of you have now downloaded. And this is a tool that will very quickly and easily help you figure out how much you should actually be looking at based on today's interest rates and your personal financial situation. It will give you several options to choose from, and it takes into account everything all the way down to your tax bracket. It's free to you. Please take advantage of it. If you want to learn more about it, you can watch this video next. And number three, specifically if you're wanting to buy new construction and be moved in before the next school year starts, you have to be contracting your home now. If you wait until summer actually starts, if you contract now, you're going to have plenty of options to choose from. There are a lot of homes that are halfway through being built that people haven't contracted that are going to be completed in that June, July, August timeframe. But if you wait until summer actually starts, you're going to have very little inventory to choose from, which means it's very likely you're not going to get to buy the floor plan that you like the best. I'm telling you, this happens every single year. If you wait until summer has actually started to look, you're basically walking into these communities and saying, I will just take whatever you have left. So please listen to me. You can contract today and still not have to close until June, July, or August. So if this is you, make sure and call me today and let's take a look at all of the options while they still exist. Okay, now let's move on to the local markets. We're starting with the MLS data, starting in Dallas County. In Dallas County last week, we had 558 new listings. That's 54 less than the previous week. 297 closings. That's 10 less than the previous week. Of the homes that closed, 96 were immediate sales, meaning they contracted within the first week. That's 2 more than the previous week. 456 went under contract. That's 94 more than the previous week, which that's an interesting stat because like we said, we saw a decrease in the number of people applying for mortgages last week, but we saw an increase in the number of pending sales. So even though rates went up, people were still contracting who had already been approved. We just saw a decrease in the number of new people getting approved. And in total, there are 2,617 homes either under contract or in pending status. That's 69 more than the previous week. Now moving on to Collin County, we had 413 new listings. 47 less than last week, 233 closings, 9 more than last week, 86 immediate sales, 16 more than last week, 267 went under contract, 16 more than last week. In total, there are 2,003 homes either under contract or pending, 71 more than last week. Now let's move on. We're going to take a look at the Market Action Index, and we're going to be starting in Dallas County. And all the Market Action Index is this one easy to read graphic with a number that takes into account all of this data. Anything a 30 or below is a buyer's market. Anything above a 30, we're just asking how much of a seller's market are we in. We're at a 46, which is a strong seller's market here in Dallas County, and it's actually continuing to climb, which is not unusual. Again, at this time of the year, what we're looking at here is anything looking unusual, and it's not. This is the time of year when things heat up. The spring market is here. Prices are going to be going up. And that's what you see here, totally normal. Median days on market did have a drop down this week, but again, that's just 1 week. We're gonna wait and see the trend. As you can see, we held firm at 42 for a lot of weeks. Now we're down to 35. It wouldn't be unusual if we jumped right back up to 42. Number of homes having price decrease, not moving at all, holding steady in this range. Inventory slowly climbing, that's good news and what we wanna see. A lot more people should be listing their homes in the spring. And of course, the Market Action Index just says the market is heating up a little bit. But the point here is everything's looking totally normal. Now let's move on to Collin County. Median list price as well, continuing to climb. Median price of new listings has these big fluctuations every week. So what's more helpful right now is just seeing the median list price climbing. That's what shows us it's normal. Median days on market over here have been down at 35 for a while. The big number I always talk about in Collin County is the number of homes having a price increase every week. I've covered this a few times, but what this means is more than 1/3 of new construction homes are having a price increase every single week, What I always say is that tells me that whatever the builders are seeing, which is live data, the actual number of people coming in and contracting and building on their lots and all of that, whatever they're actually seeing is telling them that it's time to increase prices. And not just that, I wanted to address something because you may go and look at communities online. I ran into this twice this week where it looks like they have 10 homes available for sale. So you would think, well, maybe things are slow there. But in reality, they're not allowed to write any more contracts this month. So if you wanted to go buy a house in the community I was looking in this week, you have to wait on a wait list until May 1st. And then at May 1st, they start calling in order the people on the wait list, and they're only going to get to sell a set number of houses again. This is because they were selling too quickly. And when you're one of these big companies, you don't want your community to sell it too quickly because you've got to pace yourself. You've got to time this community being finished with the start of your next community. So even if you see a lot of inventory in the neighborhood, they may be selling so fast that they're not allowed to sell homes until next month. And then inventory as well, starting to climb. That's what we want to see. And the market action index here held this week just around a 43. So I still love looking at these numbers. It just shows me what I'm already seeing is that things are heating up, which is totally normal for this time. Okay, now let's move on to the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin County. And these are ranked using that same market action index number. Starting with the hottest cities list, Louisville heats up to the number 1 spot, which means Grapevine cools off to the number 2 spot. So these two switch places. 67.17 is very hot. Remember, a 30 or below is a buyer's market. Coppell remains in the number 3 spot. Carrollton heats up 2. Plano remains. Ferris cools off 2. Richardson and Saxe remain. Lancaster jumps onto the list out of nowhere at number 9. Allen cools off 1 to number 10. And Garland cools off and falls completely off the top 10 list. Now we zoom into the specific zip codes. The absolute hottest is Louisville, 75067, Garland, 75042, Dallas, 75287, Louisville, 75077, Plano, 75023, Irving, 75063, Frisco, 75035, Grapevine, 76051, Plano, 75025, and Carrollton, 75010. So that's the absolute hottest. Now we're going to move on to the same thing, looking at the coolest cities and zip codes. Van Alstyne remains the coolest. It has been our only buyer's market for a long time now. Then Nevada cools off 2 this week. Lavon remains. Blue Ridge heats up 2. Prosper cools off 1. Leonard heats up 1. Rockwall remains. Farmersville and Salina both remain as well. And then Red Oak jumps on to replace Whitewright for the hottest city on the coolest cities list. Then looking at the zip codes, the absolute coolest, Van Alstyne 75495, followed by Dallas 75204, Dallas 75205, Nevada 75173, Dallas 75203, Dallas 75235, Lavon 75166, Blue Ridge 75424, Irving 75038, and Mesquite 75181. Remember, if you're looking to buy or sell, whether it's next week or next year, I'd love to connect. Call, text, or shoot me an email. Thank you for watching, and I'll see you in the next video.